Hey traders, David Frost, My Strategic Forecast. You're here for another episode of Common Sense Market Analysis. Today is Wednesday, August 28, 2024. We're looking at a daily chart of the SPY, or SPDR, which is the proxy for the S&P 500. What do we have on the docket today? Well, we had what's called a down day in the trading parlance. We have an every other day situation going on. Red, green, red, and we'll see what tomorrow brings, whether it's green or not. But we have some interesting places. We have some interesting things Mrs. Market ran a test of today. It all depends on how you choose to look at the market, but we are the umpire. We are calling balls and strikes. And we are interested in important places when we can identify why those places are important. Let's start with one case in point right out of the chute. Now, that blue line represents 554.87. Why is that number there? What does it essentially represent? Well, in fairness, it now represents a couple of different things. But first, let's look at this breakdown candle high. This is a big-time breakdown candle high. The market tried to rally, it filled a gap, and then it absolutely collapsed back down from a price for a reason. We don't need to know the reason. We don't need to dig through the news to find out what the reason was that day. It doesn't make any difference. The market thought that price up there was important. Therefore, we're going to concur and also believe it's important until proven otherwise. Okay, fair enough. Then we have this breakdown candle from the 22nd of August, where the market was then after that rescued. She could have continued down. She could have had another several days or at least one more day of a down day. But you'll notice the low on that day was 554.98, not too far from that 554.87. And then the low today happened to be 555.04. Again, not too far from the low here, 554.98, just pennies away. And then also, big scheme of things, pennies away from that breakdown candle high. So one thing we can say, that we know that inside, if she gets back below this breakdown candle high, that's going to be trouble for Mrs. Market. Last night I told you about a 553, and if I didn't, I'm telling you now, 553 is also important below 553, and you want to pay attention because it could in italics for now, could start to unravel below 553 with candles closing below 553. Hourly, half a day, full day. How about a weekly close below 553? You're not going to like that one. For now, we're in the camp of 554.87. It's also in the vicinity of today's low, which also is in the vicinity of the last breakdown candle low. And I don't talk about these a lot because the next day is where the market was rescued. And therefore, when there's a rescue operation, we want to know what that low was. I don't care what color the candle was. I'm looking at the rescue the next day, and she was rescued. Therefore, I want to know why she was rescued, what was going on down there. And the best thing I can identify from where I sit was 554.87. It's a give or take. I think that's the spot. Write that down. Put it on a sticky note. Now that we talked about that stuff, let's talk about the other side of things. Is this just a pullback in the midst of an uptrend? Are they eating time off the clock underneath the most recent all-time highs and just eating time off the clock in order to build energy, to trade higher yet again, make new highs and continue higher? Is that what's going on? Is today just a down day, down a little more than 0.5% in the SPDR? Not a big deal. $3, 3.25. It's not a big deal. It's just a pullback. And as long as she stays above, yes, above 554.87, the last breakout area, the last breakdown candle high, then she's in a position to continue eating time off the clock, building energy to move higher yet again. And it would look like this when she's ready to go up to new highs. And if and when she does make new highs, we do have the next number above in the northbound lane. We will bring that to the forefront if and when she closes above the all-time high. Seems like from time to time, more often than not, everything hinges on what the Fed is going to do. We all know about that. It's not a secret. It's not a revelation. Is the Fed going to lower interest rates? Are they changing policy? That's what Jerome Powell said pretty much in his speech at Jackson Hole, the banker boondoggle last week. Changing policy means they're going to start cutting interest rates. The tightening phase is over, and it has been over. She hasn't tightened in a while, but the new phase of loosening, if you will, easier money policies is upon us. That's what the market wants to hear. That's what the market wants to see. So the question is, are we going to see a buy the rumor and sell the news event? What would that look like? Well, it would look like make new highs leading up into the September Federal Reserve FOMC rate announcement, and whether she cuts by 0.5% or 0.5 point or 1/4 point, whatever it is, will that be a sell the rumor event or sell the news event? Buy the rumor leading up to the FOMC announcement and then pull the rug out / sell the news after the announcement. That is a possibility. We don't know that's going to happen, but that certainly is something that you need to have on your quote-unquote radar screen. You need to have it on your sticky notepad as a just in case, or it is one of the possible schematics out there, at least from where I sit. We got a 3-day weekend coming up. Are we going to float them up into the holiday weekend? We have Labor Day coming up on Monday. So will they float them up into the Friday floater, 3-day weekend, Monday's off? That happens a lot. It doesn't happen every single time. It happens the large majority of the time. You don't have to take my word on that. You can go back and do the homework. You can look at all the weekends that comprise the 3-day holiday weekend, and you could see what the market did leading up into those. Some they will have sold off. The majority they float up into the holiday weekend. It's just a thing that's knowledge. It's stuff to know for now. Did we make money inside the numbers today? How about the live room? And the short answer is you better believe it. It was somewhat of a what we call bonanza in the live room today. I'm going to point out a few important things. Here are the notes. Let's start with the 0 dark 30 stuff. Couple of important things. For example, 560.75. That's a pivot. What does that mean? Well, she's bullish above and she's not below. So the first order of business each and every day, if I can identify a pivot, I'm going to identify the pivot. Put it on the board, 560.75. 5-minute chart, SPY, right of the vertical is today's activity. 560.75 is your pivot, and you can see where the market was oscillating around that pivot a good part of the morning session. And yes, there were some trades from the pivot from a scalp perspective. The bear case, first, 559.50, and if below, there's another number down at 558. 559.60, 50, sorry. Not a whopper by any means, but it was a scalp trade with potential. Not much potential, but they gave us the base hit. Base hits put you in the Hall of Fame. When managing this trade in real time, we take our profit, we take our base hit, and we do not, and I repeat, do not let the trailing portion of the trade go bad on us. And then you'll notice, by no means was it another whopper, but certainly support at 558. And again, provided a minimum required base hit. Base hits put you in the Hall of Fame. And by the way, that was trade number 3 today. Trade number 1 was off the pivot. We didn't even go over that one yet. 3 base hits, you already scored a run and you got 2 men on base. I'll take that every day. Let's scroll up and see what we had as the morning begins to unfold. Same routine here with the numbers, the ones we just saw. This is a reiteration. Above the flat line, she goes to the pivot. Above the pivot, 562, didn't get there. 935, support zone is 560.75 to 559.50 for a bounce back situation. And there was trade number 1. And again, not a whopper by any means, but the minimum required base hit. What is the minimum required base hit for us? Our scalps, and these aren't most traders' scalps. Scalps for most traders are a couple of points. Our scalps are 5 to 7 S&P handles, 50 to 70 SPY cents. We have traders making thousands of dollars with those scalps. Pause the video, read the notes, go back to the chart, and double check the work. By 9:41, we got a nice trade. Rest is trader's choice. Below the pivot, she can drip lower. We know where the next support is. 1044, 559.50 is the other side of the support zone. Again, pause the video, read the notes, go back to the chart, and double check the work. If you're at all active in the S&P, trading the S&P during the trading day, then this is information that you can benefit from, bar none. Now look at here. If she's going to sell them harder, guess what? 556.21. I'm leaving you for the day a little early today, but 556.21 was the last number I put on the board. Now, that wasn't the lowest number they hit. They did spike it a little bit, but that certainly was beneficial to have going out for the afternoon session. If you were looking to pick off something in the afternoon, if, capital I, capital if you were, then that was a good number to know. What about stocks on the move? How did we do over there today? We had a laundry list on the board today. We had Foot Locker, Abercrombie, PDCO, PVH, and NCNO. So let's take a look at the charts of the ones that hit their entry objectives, FL, ANF, and PVH. First one up, Foot Locker. Bit of a wild thing this morning. You can see what happened. They bounced right back around in this zone from the third number back above the first. We had traders make money in this thing right out of the chute from the live room perspective this morning. However, that was somewhat of a rodeo situation, but you could see where the support was. At one point or other, the bottom two numbers certainly did work. They cut through the top one like a hot knife through butter. Abercrombie, actually each number pretty much worked independent of one another. When you look at it, you say, well, the first number never got to the second number on the first dip down, and then they gave you the deal by going higher. Got to about 145.50 off 142, so that's certainly well more than the minimum required base hit. They gave you about 2% on it. Went from the second number back to the first number, and then they went from the third number back to the second number. So how you doing? The numbers work. You never know which ones are going to give you the rocket ride out of the chute. This one, PVH, hit the number, spiked it by a few pennies, and just ripped it back up in the other direction, was up near 97, 98 in just a matter of minutes. From a day trading perspective, that's pretty good, don't you think? Now, what's going on over in Camp IWM? So what we can say about Camp IWM, and they were down today almost or relatively close to on par with the S&P 500. So not leading from a downside perspective by any means, nothing to write home about. But what we can say is what we said last night, which is they could run a test of this breakup candle low and still maintain this bullish stance, building energy for another push higher. So that could be what's unfolding now. So it's still on the table. Sticky note stuff, puzzle piece, you know how that works. Pullback after 3 straight weeks of upward activity, not out of the question, kind of normal garden variety stuff. We'll just use the low of this breakup candle, 214.79, same as last night, as our bogey. Where are the transports teetering around at? Interestingly enough, right around that trend line. How funny is that? Do you think the market knows about that trend line? I would say so. There's your weekly chart as a refresher. Break above the upside and stick week after week, and that's a breakout in the making. Same thing goes for the downside, and it doesn't have to wait until they get to the apex of the triangle. They were up 34 points today, 0.2%, but it was up nonetheless in the face of an S&P that was down, a NASDAQ that was down, a Dow that was down. Canary in the coal mine, second favorite market leading indicator, but a number one canary in the coal mine. It's a puzzle piece. 34 points isn't anything to write home about. We're not going to make a federal case out of it, but we are going to note it as a puzzle piece, a small one. It's not like some big corner piece or anything like that. What about the Q people? How about giving up the 50-period moving average? And they're also teetering on no man's land. We talk about this all the time. This is the entrance to no man's land. That breakup candle low, that is the entrance. And what did they do today? They tested it, and there was, and like I always say this, and we talk about this in the live room all the time, these places, generally speaking, more often than not, you will get a bull-bear battle at those places. So you can see when you go down to an intraday chart what was going on down there. You got a bull-bear battle at that place. They bought them up at that place. Nice trade. That doesn't happen every single time, but those places are one of those things that I point out to traders all the time, each and every day in the live room. We look at charts all day long. We find these kind of places all day long, and I point them out all day long. They don't all do exactly that, but they are interesting to know. Above all the moving averages, trend is your friend. Here's a weekly chart. You got a pullback situation going on. Potential lower high. Is this going to be one of these situations where you have an A leg down, you have a B leg up, and then you have a C leg down to make a new low below the low of the A leg. Is that what's going on here? Or is this just eating time off the clock and we're going to, again, make new highs or at least approach the highs in the Qs? Well, we don't know the answer to that yet, but right now we have a lower high, so you have the makings of an ABC downward corrective pattern. Puzzle piece on the table, that's an umpire calling balls and strikes. Spider, eating time off the clock around the former highs, building energy to make new highs, unless or until they get below certain things that we talked about earlier in this video. But that's not what we see in the Qs. You have to be objective and look at each and every market independent of one another. All charts act and react the same way, but this is a lower high situation. This is not eating time off the clock underneath the most recent highs. Is anything wrong with the financials? No, they were up 11 cents today in the XLF. If nothing's wrong with the financials, is anything really, really wrong with the underlying structure of the market? The financials are telling you markets are strong. That's what they're telling you today. We take it at face value today. You find the XLF down 3% tomorrow, I'll change my tune. But today, at face value, nothing wrong with the financials, nothing wrong with the structure underlying the market. What about Smashmouth? Philadelphia Semiconductor Index, similar pullback to the Qs, down $4, 1.6%. Something to raise an eyebrow about. Same to similar lower high situation. The semis are a good proxy for the market. They are a good proxy for the tech space. And without the tech, you're not going to get the rest of the market participating. If you're going to get a bullish rally in the market, you need tech to participate. You need the semis to participate. Speaking of which, we had Nvidia earnings after the bell today, and Nvidia went down to 114, and it's already back at 124. Interestingly enough, in the live room today, Armand, one of the longtime members, asked, do you have numbers in Nvidia? They have an 11% implied move on earnings. So what are your numbers up and down today? And I gave him, I had a number close by. It wasn't 114, but I gave him 112.90. I said 113. That was pretty close to the 11%, not bad for a rookie. And in the after hours print, you got a little bit of a dip also in the SMH, going back to the regular session, talking again about the daily chart and the big picture as we do in these videos. This can be a pullback pattern, but if it's going to morph into something different, it has to get below X. What is X? Well, my number is kind of lower for X. X is really 2.25. That's kind of a teetering on a lot lower if they get below and start staying below 2.25. But there's something before that, and we're going to use the 20-period moving average for argument's sake for now. It's close enough. 20-period moving average is right here, and figuring get below that, and they're starting to leak, and they're changing the trend, yada, yada, yada. Have I told you how much I appreciate each and every one of you? Without you, these videos, they're not possible. That is true and accurate information. We're pulling the ripcord here today. I'm David Frost, My Strategic Forecast. Thanks again for tuning in to another episode of Common Sense Market Analysis.